Wall Street doesn't hand out 40%, 50%, and higher upside targets lightly, especially not all at once. But over the past few weeks, multiple top-performing analysts have slapped strong buy ratings on 3 under-the-radar stocks. Each is tied to a very real catalyst happening right now, and here's a spoiler. One of them is a high upside potential AI play. These aren't momentum trades or overcrowded names, and that's exactly why the opportunity still exists. I'm breaking down all 3 stocks today. Quick intro, I'm Steve Reitmeister. I have over 40 years experience analyzing the stock market. I spent many of those years as editor-in-chief at CALX.com, sharing insights with millions of investors. Now I'm a partner at WallStreetZen.com, where I help build a quantitative system to allow investors like you to easily find the best stocks. Okay, if you like stock pick videos like this one, please give this video a like. It lets me know to keep recording more of them in the future. Now back to those 3 stocks. First up is SiriusPoint Limited with a symbol of SPNT. This is a global reinsurance company with over $3 billion in total capital, operating across 150 countries. Now, I know reinsurance isn't the sexiest industry, but that's exactly why this special opportunity is still available. That's because Wall Street tends to overlook these mundane businesses until something significant happens, and something just did. So what changed? SiriusPoint just acquired Assist America, expanding their IMG services division. This isn't just another small add-on. It's a strategic move that positions them for enhanced growth in a sector that's seeing increased demand. In related news, Randy Binner at B. Riley Securities, who's a top 13% rated analyst based on his historical stock picking performance, he just initiated coverage on the stock with a strong buy rating and a price target that suggests nearly 50% upside from current levels. When a top-tier analyst initiates coverage on a stock in a boring sector like reinsurance, that tells you something meaningful is happening beneath the surface. Binner is clearly noting SiriusPoint's strong capital position and expanding service offerings as the key drivers for future growth and share price gains. From a quantitative perspective, SPNT scores a coveted A rating in our Zen rating system. Historically, A-rated stocks in our system have averaged over 32% annual returns. And looking at the company in particular, there's clearly a cause for this high rating. First, it's the number 1 rated stock in the reinsurance industry, which itself has an A rating, meaning right industry, right stock. The component grades show us why this is the case. A rating in both growth and sentiment, along with a B for both the value and our AI factor. That's a combination you don't see often. Strong growth characteristics in a value-oriented sector. Now let's talk risk. Reinsurance is a cyclical business. Pricing cycles matter. Natural disasters and catastrophic events can impact results unpredictably. And while the company's capital base is strong, the sector itself can be volatile. The other consideration is that this isn't a household name, which implies it's not a huge player. This leads to less liquidity, which also means bigger price swings. But if you're looking for a fundamentally strong company in an overlooked sector leading to fair value 50% above current levels, well, that's exactly the setup that SiriusPoint offers right now. Quick pause here. If you're finding value in these picks and want to catch more timely setups before it's too late, then hit that subscribe button and notification bell down below. This way you'll receive new stock picks and market insights every week, helping you stay ahead of the crowd. Okay, on to stock number 2, which is CALX Incorporated with a symbol of CALX. CALX provides cloud software platforms to broadband providers, basically the infrastructure that helps internet companies deliver faster, better service to customers. And with the ongoing build-out of broad-based infrastructure, this is a growth company positioned in the right place at the right time. Here's what makes CALX particularly interesting right now. Their next earnings report is on the horizon. Gladly, we are seeing unusual analyst activity. We're talking about 3 separate analysts in the top 1% for their stock picking performance, all backing the stock with strong buy ratings. Even more appealing is the range of fair value price targets they're putting on shares, anywhere between 35 to 55% upside from current levels. This also means the smart money is very bullish on the stock. And when multiple elite analysts from different firms are aligned, that's not random. They're seeing something special in the fundamentals for the firm. Let's dig into those fundamentals. CALX also earns an A grade from the Zen Ratings quant model. This puts in the top 5% of all stocks analyzed, leading to a strong buy recommendation. On a component basis, it scores A grades in both growth and sentiment, along with B grades in financials, our proprietary AI factors. This 115-factor review of CALX tells us that the business is executing well, which increased the odds of more earnings beats and more share price appreciation on the way. When you combine strong Zen ratings with multiple top-tier analyst endorsements heading into the next earnings report, you're getting a setup worth watching. Now, let's consider the risk. For starters, broadband infrastructure is competitive. There are bigger players in this space, and while demand is strong right now, these build-out cycles can be lumpy and uneven. The other risk that the stock is already up significantly. So while analysts are pointing to more upside ahead, you're not buying at rock bottom. But if you believe in the long-term broadband infrastructure trends, and you should be, and want a fundamentally sound player set to grow even more, then it's hard to find a better option than CALX. Okay, before I move on to stock number 3, I wanted to share something with you. I use the same Zen Ratings quant model to find more high potential upside stocks I believe could double or more in the next year. You can get these stocks for free either by scanning the QR code or by clicking the link in the description. All right, let's move on to that third and final stock, which is Taboola.com Limited with a symbol of TBLA. This is the AI play I mentioned in the intro. What they do is provide AI-powered generated content recommendations. If you've ever been on a news site, which I believe you have, and seen recommended articles at the bottom, there's a good chance Taboola was the algorithm that was working behind the scenes. Here's the unique catalyst. Taboola just announced Deeper Dive, their Gen AI answer engine to help major publishers connect readers with related information. This is their play into the generative AI space, moving beyond just article recommendations into AI-driven content discovery. And the numbers are backing up the growth story. Last quarter, they provided a holy trifecta earnings report that included a revenue beat, earnings beat, and more importantly, raised guidance for the future. But here's what really caught my attention. They bought back nearly 12% of the shares in the first half of the year. When a company is aggressively returning capital to shareholders while simultaneously beating numbers and raising guidance, that's management signaling serious confidence in what lies ahead. 2 top-rated Wall Street analysts are also backing Taboola with strong buy ratings. That includes Zach Cummins at B. Riley and Barton Crockett at Rosenblatt. Crockett just recently initiated his buy rating on the stock with a fair value target that suggests over 40% upside potential from current levels. When top-performing analysts like this cluster around a stock with this much conviction, we need to pay attention. The Zen Ratings confirms the impressive fundamentals these analysts are also seeing. That's because Taboola has earned an overall A or strong buy rating, put in the top 5% of all stocks we analyze. The component grades also sparkle for Taboola. The B ratings for growth and financials tells you the focus on AI integration is paying off with strong execution and impressive shareholder returns. Whereas the A for sentiment tells you that the smart money crowd is circling these shares for good reason. Let's talk about the risk. Advertising is cyclical. If we hit an economic slowdown, then ad budgets will be cut first. Taboola's business model depends on publishers and advertising continuing to spend. The other factor, AI is competitive. Everyone's launching AI features right now. Taboola is not the only player trying to integrate generative AI into their content recommendations. And since we are talking about a small cap tech stock trading under 5, then we are going to see more volatility in the daily share price. But if you're looking for more exposure to exciting AI growth without suffering those nosebleed valuations of so many other stocks, then it's hard to find a better choice than Taboola, especially given recent earnings beats, especially given raised guidance, and especially given the aggressive share buybacks. So there you have it. 3 strong buy stocks with 40 to 50% upside potential backed by top-performing analysts and stellar quantitative ratings. SiriusPoint in reinsurance, CALX in broadband infrastructure, Taboola in AI-powered advertising. 3 different sectors, 1 common theme, that being fundamentally sound companies with exciting growth catalysts playing out right now. Remember, these all earned A ratings from our Zen Ratings model, which historically identifies stocks that deliver 32.52% average annual returns. That's not a guarantee, as performance never is, but it significantly improves your odds of finding winners before the rest of the market catches on. Now drop me a comment below and tell me which of these 3 stocks interest you the most. Plus, if you want more exciting opportunities like these, then be sure to sign up for our free email newsletter, where every Sunday we feature the top stock picks for the week ahead. Just follow the link in the description. And in case you're curious how I found these stocks, they all came from the wide range of data and tools on wallstreetzen.com. This includes our proprietary Zen ratings, a 115-factor fundamental review of a stock's attractiveness powered by AI. You can get free Zen ratings on over 4,600 stocks at wallstreetzen.com. Go ahead and enter any ticker to see these vital ratings on our quote page. If you like the idea of high upside potential stocks that are currently flying under the radar, then I highly recommend you check out my next video about 3 stocks I like better than Netflix. It definitely pays to go beyond the obvious plays.